Jason Schenker is president and chief economist at Prestige Economics, which is an energy research and consultant firm. And he's joining us right now from Austin, Texas. So, Jason, first of all, people were sort of trying to figure out what to make of this discount rate increase. What do you make of it?
Well, this is a signal by the Fed that growth is on the way. They do expect more growth, but it's not, as you pointed out, the full hiking of the Fed funds rate, which they're going to have trouble doing this year.
And so you see it, though, as a signal that the Fed feels comfortable enough to raise this rate. That means that the Fed also has confidence in the economic recovery.
This is true, yes. There is an economic recovery underway. The Fed has now blessed the data that we've seen coming out, despite how spotty the most recent unemployment numbers were. But the truth is, if unemployment remains high, the Fed's not going to be able to hike too much. They're going to have to take baby steps. And that's why crude's up, because you're not going to have the Fed move fast enough to really constrict the money supply significantly, while at the same time giving that signal that growth is coming and going to be strong.
Well, Jason, we see crude climbing to a 5-week high after that Fed decision, but is this, as you mentioned, the baby steps indicative that the Fed believes that the economy can now stand on its own without a stimulative effect?
Well, in many respects, yes. The job market still remains a question, and how much tolerance the American public has for an unemployment rate that's between 9.5% and 10%. That's another question regarding stimulus that will probably be answered on the fiscal side rather than the monetary side. But as far as GDP goes, we do see growth this year. 1.5% to 2% seems quite likely, and all the data seem very positive, except for the lagging things like employment.
Jason, to get back to oil prices here for a moment, we also got CPI data today that showed inflation relatively benign. But what's going to happen if oil prices continue to rise? Are we going to get more of a feed through to consumers and then in turn more of a pushback?
Well, we are going to get more inflation if energy prices continue to rise. That's true. But there's two types of inflation. There's the regular CPI for normal people, and then there's the core CPI, which the Fed looks at, which is for economists, which excludes food and energy. And so even if oil prices rise, that's not going to be enough impetus to drive the Fed to hike rates more than 2 or 3 times at most this year.
Well, no, it may not be enough for the Fed to do that, but will it be enough to then sort of feed back and put pressure on energy prices?
Well, I think we are going to see pressure from energy prices throughout the year, more so coming from growth in the U.S. and growth internationally. As the entire global economy recovers, that's likely to continue to put pressure on oil higher. But there's going to be a lot of volatility because of other factors like the dollar and inventories, which provide short end of the curve volatility. We see oil prices this year averaging between $70 and $90 a barrel for most of the year.
Jason, you just spoke of the international picture. Workers in France went on strike today. They began shutting down crude processing operations. How much pressure is that going to put on it?
Well, strikes in France are not uncommon, so I would not say that this is something that we should be surprised by. In terms of the impact on the global economy, things like growth in China, or whether the Chinese can actually dampen their growth rates, what happens in India, what happens in Brazil, these things, if the Eurozone recovers quickly, these factors, which we do believe lead to more growth, are going to be much more significant and pose upside risk.
But would any refining shutdown then lead to a shortage of supplies?
Not necessarily. It depends where the supplies are going, whether it would show up in the U.S. data. And the truth is, right now, refined product looks very well supplied in the U.S. and abroad.
Hey, Jason, you mentioned the dollar a minute ago. And is that the reason why you don't think oil's going to get higher than 90 bucks, that the dollar's going to continue to gain strength as the economic recovery here in the U.S. takes hold?
Yes, and we've seen the dollar really take off in the last couple of months. And that stronger dollar, because oil's priced in dollars, that could dampen prices and could mitigate some of the upside price risk.
All right, Jason, thank you so much for joining us. We appreciate it. Jason Schenker of Prestige Economics joining us. Jason, thanks.